As I say, big thank you to our corporate partners and our partners for supporting ARC360, continuing to support us through these testing times for everyone, I'm sure. And we will get ourselves started. So let's move things on. So again, with these webinars, as always, I'd like to put up the little disclaimer first and foremost, so you can see it on your screens there. Again, for those listening in, the views and opinions expressed during the following webinar are those of the individual contributors and do not necessarily reflect the official policy or position of the contributor's employer, organisation, committee, or other group or individual. Please respect all contributions, and we encourage you to join the conversation via the interactive functions available. So joining us this week, we've got Mark Turner, Chief Commercial Officer of WNS Assistance. We've got Trevor Webb, Claims Director of Sabre Insurance. And we've got Chris Weeks, Executive Director of the NBRA. So I will just stop sharing the screen for one moment. And good afternoon, all.
Afternoon.
Good afternoon.
We're very well. We've got plenty to go at today. Again, we've got CAPS data insights. We've got some integral insights. We've got obviously the continued general conversation around the industry and its re-emergence. So we will find out plenty more. But usual fashion, just a very brief kind of catch up with each of our panelists now. And I'll come to you first, Trevor. Hope you're well. If you could just give a brief introduction to yourself and kind of a little oversight in terms of really the last kind of couple of weeks within Sabre, really.
Yes, certainly. So, Trevor Webb, Claims Director at Sabre. I've been with the business for about 10 years. We're a small monoline insurer, distributing primarily through intermediaries, about 2/3 of our business, and then to our direct brands, GoGirl and Insure to Drive. As a business, we're very loss ratio focused, so we're focusing on bottom line, not so much around top line. Our claims operation is out of Dorking, single site operation, where our claims employees handle all of the back office activity, third-party liability recoveries, etc. And we outsource to our partners Innovation Group, first notification and accident repair management piece. All of our people are working from home, and we're in a fortunate position where we've not had to furlough anybody. I guess at the moment, I've got two sort of key focuses. One is working very closely with our actuarial team and our pricing team in terms of thinking what the future looks like, because we're pricing business today that's exposed in both today's world of suppressed claims and 12 months into the future. So we're trying to sort of look through to say what are the correct premiums that we need to cover that period of time. The second is, again, with pricing and actuarial, is looking at the changes to the claims that are coming through, because there are some significant changes in terms of the patterns. And in a moment, we're going to discuss some of those geographical ones, which is just an example of it. And third, again, with our actuarial team, is how do we deal with this issue in terms of our overall data? As insurers, we look at data on a 3 to 5 year range. And yet this is a scenario that's going to be with us for 6 months, 12 months, so we need to back that out. Operationally, we're now thinking about return to the office, and we're putting out information to our staff this week, and really we're looking at a return to work. For those that are happy to do so over the next couple of months, really with a full phased return to work by September. So that's our current plan, absent really a second peak. And then I guess sort of importantly in terms of how this discussion goes, we are working closely with Innovation Group in terms of sharing information of both around our operational performance, but also around the network and those things that we can do to work together to try and support one another. So I guess that's what's taking up my time, alongside reinsurance renewals and lots of other BAU stuff.
Yeah, great stuff. Thank you very much indeed, Trevor. And I'll come to you, Mark. A little insight into your world right now.
Yeah, hi everybody. I'm Mark Turner, employed by WNS Assistance as Chief Commercial Officer. My role is growing the UK assistance business, and my responsibilities include new business, retention of current accounts and their growth through the commercial and product development functions. I've been with the business for 23 years now and was part of the original startup in '97 called Town and Country Assistance, which was subsequently acquired by WNS Group Holdings in 2002. WNS Assistance provides motor claim services and some property services to a wide range of customers in the UK, including tier one insurers, brokers, a rapidly growing number of MGAs, clients where we've tagged on policy servicing as a product as well. Services are generally provided on a modular basis, where repair management, the theme of today, is the most prevalent, but also end-to-end services from F&O to large loss, which is complemented by real-time analytics and a credit hire in-house credit organisation and SRA regulated law firm business. We are owned by WNS Group Holdings, a New York stock listed business process management leader with over 40,000 employees around the world. Like Trevor, because we provide the end-to-end solution, all of the data that we have internally across those claims functions that inform so many decisions within insurance companies and forecasts within insurance companies, we're also responsible for doing for those MGA customers and large insurers where we represent the entire solution as we control the full indemnity spend. Priorities at the moment, we are, as with most, we saw the similar reductions that have been evidenced across the marketplace down to a sort of a 75% reduction mid-April and emerging more so in the last 2 weeks than the 6 weeks prior to that. We continue to monitor the intelligence and the behaviour patterns that display a correlation with claims volumes. So generally, weekly patterns that initially saw weekends with a disproportionately higher number of incidents, so that we can resource and spread that resource to accommodate potentially new behaviours associated with re-emergence. This includes insight from Deloitte on personal lines impacts of COVID, including experience from other countries, driving data that's published online, things like Google mobility data, and also telematics data from our partners, which help us to be hopefully one step ahead of the claim being reported. We're back to roughly 54% down prior to lockdown, but we are seeing, as we've said in the last couple of weeks, a resurgence, and we expect with some of the other data that we've looked at and the patterns early part of this week to be roughly 50%, perhaps 49% under pre-lockdown. But monitoring those, and I think changing our focus from the immediate short term to the long term, sort of medium and long term impacts of this public health crisis and more so economic crisis is consuming our time at the moment.
Brilliant. Thank you very much indeed, Mark. Great insight. And Chris, we haven't seen you for a couple of weeks, for those who have been tuning in. So Chris has joined us regularly. So what's the update on your latest from the MBRA?
Well, first of all, thanks for having us back, Mark. I literally would not know what to do on a Wednesday afternoon if it wasn't for ARC360. But MBRA are just trying to get back to normal now, and helping our members get back to normal. So, I guess you've got the claims data around the 50% mark at the moment of pre-lockdown. We're lucky that we work with the PRA, the Petrol Retailers Association, and they're sort of saying at the moment, they're seeing fuel sales around the country at roughly 63% of what they were prior to lockdown. And that's been a really good indicator so far for us of, what's likely to be coming in the following couple of weeks. So we are on that continued upward trend. The body shops are bringing back more and more of their staff out of furlough. And we're really pleased, actually, that last time I was on a couple of weeks ago, I mentioned that the MBRA had written to the Chancellor, Rishi Sunak, and said that, effectively the furlough system that we've got at the moment is a little bit too rigid. Once you come off it, you come off it. And if you go back on again, it's got to be for 3 weeks. And the French had a much more flexible system where effectively the employee decided how they operated it. And we urged the Chancellor to make some changes along those lines. And delighted to say that, they've been able to bring those in from July. July is a bit disappointing. I wish it was June rather than July. But that'll allow body shops to bring back some people on a temporary basis or part-time basis. That'll give them a lot more flexibility should the work volumes flex up and down. But yeah, pretty much at the moment, we're just helping everybody get back to work. And, we're also going through a program of phoning all of our members. We've got 2 people off the road going through phoning all our members, seeing what their issues are, seeing if there's any collective issues that we can address.
Okay, great stuff. And anecdotally, you are you're in HQ in London today, aren't you? And you said it was a little bit quiet.
Yeah. I was astonished, actually. You know, I came in this morning on the train and the tube, and the tube was literally empty. You know, and there's TfL staff standing around everywhere. You know, I must have been offered about 12 face masks, but there's just nobody here. But the roads, ironically, are absolutely full up in London. So, and I was talking to a colleague, the car parks are absolutely flooded in London. So I think what's happening is a lot of people are driving in and trying to avoid the public transport system, which is ironically completely empty.
All right, great stuff. Right, we'll go back. So we will just skip around a little bit. So we'll have a look at the CAPS claims analysis report for last week. So weekend in the 29th. Some of you will have seen it. It got circulated on Monday, but just to give you an idea, so it looks at unique claims, so claims that have actually been initiated. That's a single count, and then supply chain transmissions, so those claims that have seen any additional transmissions off the back of it. CAPS obviously processing 1 million exchanges, if you like, per day. And what we've seen is, if you like, a huge surge the previous week, where we had that, what do we have, a 14% uplift. And then all of a sudden we've had that 1% decrease. So we're looking at kind of a potentially a similar pattern to what happened before. We had the increase and a little settlement. And same again, potentially. Again, is it related to, people coming back to work, claims being processed, and then kind of, capacity reaching its limit? Is it related to, obviously last week was a short week, about a half term, 4-day week as well. So again, there could have been some kind of, capacity issues there. So again, we're just keeping track of this week by week. So great job from CAPS. Regionally, increased claim activity from previous week. Again, nothing kind of significant to write home about, but little uplifts there in the North East, Republic of Ireland, Scotland, South West, and Wales. 14-day analysis. So again, this is how it's moving every couple of weeks, and you can obviously see, I don't know if we take the East Midlands, for example, slight uplift there as well. Northern Ireland, the same. So weekend in 22nd to weekend in the 29th, variability there. And then we've also got the lowest points to the highest points, which are being mapped by CAPS as well. So we can see, if you like, significant change in Northern Ireland at its lowest point, has come a long way from there. Similarly, really, Northwest, again, dropped significantly to its lowest point, and has picked up again hugely. East of England, in fact, not too much movement there at all at the moment. Now, again, last week, Ollie Chambers came on from Integral and gave us an insight into the work that they've been doing in terms of heat mapping claims. It was all obviously a live dashboard. We haven't quite got that today, so we've just got some screen grabs, but again, equally valid information. So you can see kind of the heat map here of where claims are being made. So claims activity going on, obviously the darker the colour, if you like, the higher the claims volumes. And top 6 volume postcodes, RM312, RH10, DE24, PA3 and EH12 are moving. So again, new postal hotspots. So SL3 coming to life, IG11, TQ12, M8, WF2 and TR10. And just a kind of, little oversight really, 24% growth in claims from previous week. And again, so just to differentiate between the two, CAPS is claims that are actually, if you like, being processed. These claims have not hit shops yet because of the lag potentially in booking stuff in. So there may be sort of spikes in claims in drivables, for example, that are still out there, but yet they've kind of, have been notified. So they're not actually being dealt with yet. We've got 30% growth in claims from April to May. So again, another significant, if you like, milestone. So that's a good indicator. Peak areas, again, just reiterating, Essex, East Midlands, Edinburgh and Glasgow belt, which was the same as the previous week when I was on last week, and the new hotspots emerging, Oxford, Newcastle, Belfast and Dublin. So, come back to the panellists. Chris, any thoughts around all of that kind of data that's just been heaped upon you, really?
Yeah, I mean, I think in terms of the distribution of volumes and work, you know, I think they are all, as I say, very geographically based on the kind of people that live there and the kind of enterprises that operate in those areas. It's very much what we're seeing through the feedback from our members as well. But, you know, there are sort of things that are getting in the way as well. So anecdotally, we were getting quite a few calls from our members to say that whilst they're getting instructions through, or they're beginning to come through again, customers are very reluctant to bring their cars in because they just haven't got the excess payments. It sounded a bit anecdotal, and you know, it's always something that reverberates around the industry. But as we know, you know, a lot of excess is through the price comparison sites now. You can choose it yourself. 700, 800 pounds isn't at all uncommon. And maybe on the back of people being furloughed, being paid less, or self-employed people struggling, they just haven't got the ability to pay. So we put together a little snap survey over the last couple of weeks, and it was really surprising. So we only had a sample of repairers come back. I think we had 56 respondents to it. But what they were saying is where they normally get an issue with a customer paying an excess in about 3% of the instances, throughout this COVID period, that has gone up to 15%, so 5 times larger. Of those small number of respondents that we had, they had between them 425 instances of a customer struggling to be able to pay their excess or unable to bring the car in to get the repair work done. You know, and from my point of view, well, 73% of all of them had encountered problems as well. You know, so I mean, it's an old adage, and it's one that MVRA has sort of long, you know, been asking for. But you know, I'm desperately keen for a underwriter or an intermediary to take the ball by the horns and finally start to take the excess up front at FNOL. Yeah, I'd love to see that happen, and I can't wait to announce the first one that does it, because body shops will be jumping up and down for joy. You know, there was a time years ago where getting paid for a part of the repair up front would have been great, but you know, payment terms are pretty quick now, so that benefit is evaporated. So yeah, that was just a really interesting thing that we found out over the last week or so, Mark.
That's great stuff, yeah, and that's a subject matter we spoke about when Dave Mills was on DLG a few weeks back. They're obviously trialling different things as we go. So we'll come back to that point, so let's hold that thought. Trevor, in terms of obviously the data we've just seen, again, insights from your perspective at the moment in terms of those, you know, claims increasing, types of claims you're seeing?
Yeah, so certainly the geographic thing is obvious, and if we look at the sort of the immediate 4 nations, there are very different exits from the lockdowns across there, and throughout from day one we've seen significant changes around geographic distribution, which you can explain away. So if you take the East Coast, for example, heavy in agriculture, probably more people maintaining their work, so less of a delta to sort of a normal position. I think in terms of claims type, we are seeing quite a change, and I suspect everybody's seeing all the cyclists on the road. So it will not be surprising to anybody to see that we're seeing more accidents involving cyclists. We're seeing more accidents involving animals, more accidents involving loss of control and hit and run, and some of those sort of social behaviours that people are getting away with. So that is having an impact on the mix between fault and non-fault. And I suspect, Chris, that may also be having an impact on the excess position. So that there are more customers going in that are having to pay their excess proportional relative to the number of claims that they're dealing with. We're also, and any insurer will see this, is a significant change in terms of the makeup of the vehicle car park in terms of the accidents which are occurring. So taxis, very little use, very few accidents. Small vans, high use, more accidents as a proportion of the claims that are coming through. So quite a distribution there. And if you look at your age profiles, again, you'll see some changes there in terms of the age of the driver having the accident. If you benchmark it sort of pre-lockdown and now, and it's gradually starting to move through, but we're nowhere near back to a normal position. So kids, for example, aren't driving to school or aren't driving to college and actually using vehicles less, whereas older drivers are perhaps out a little bit more than might otherwise have been the case. So, yeah, some significant changes, and that's the bit that's quite complex in terms of bringing that back into how we're pricing our business as well, and what that means going forward. I think the other thing that we're not seeing is people change their cars. So frequently, when people change their cars, that does actually have an impact on the claims experience. Not surprisingly, when you bought a new car, you tend to have an accident, or more likely to have an accident. The fact that people haven't been changing their cars during this period is again having an impact. So there are lots of different issues that are sort of coming to play in terms of that claims makeup.
That's great, Trevor. Thank you very much for that insight. And Mark, sort of same question to you, really, in terms of what you're seeing actually in terms of claims that you're processing and what's happening out there, really.
Yeah, we see a small variance on that sort of trend that we mentioned at the beginning across different lines of business. So we look after a number of MGAs and specialist insurers who have high net worth, agricultural, distressed courier, HGV, you name it, all the different niches which are out there amongst the insurance population. And there are slight different variations. I think the new norm for us currently has been able to heat map those accidents and particularly those repairs across our repair network, so that we can, hopefully be better informed and advise those repairers what the capacity looked like when they reopen, be it they reopen with skeleton staff or to the fullest extent, that they know what they're coming back to. And if they had to shut during the lockdown period, that they're not penalised for that, and the work that would be allocated to them or has been allocated to them that's mobile is still there for them to come back to. I think that's been the new norm. All of the other things which Trevor said there about the nature of the accidents coming through as well, all makes absolute sense with what we're seeing in people's behaviours out there. And I echo, again, having our own claims department like Trevor that informs the MGA actuaries and underwriters with the day-to-day pull from us. There's concerns out there with the reduction in vehicle sales, and therefore that being a big trigger to buy insurance. The squeeze on an already insanely competitive aggregator market for at quote stage, which is putting pressure on the loss ratios the other way. Also, the unknown impact that will have on reinsurance renewals, potential fraud and increases in theft during the subsequent economic downturn, and also any potential horrible credit hire claims that we see coming out the back of this lockdown.
Okay, great stuff. Go on, Chris.
Actually, while you're on, I mean, obviously, Mark, I heard what you said. You're intermediary, doing a lot of work for the MGAs now, which is tremendous. You probably haven't got a lot of scope to, do a lot differently for your supply chain. But with the MGAs themselves and the insurers that you work with, have you been able to push them at all for helping out the supply chain throughout this sort of difficult period, or is there anything you're planning to do that could help them going forwards?
Yeah, absolutely. I think aside from that planning and that sort of capacity management, which is a daily priority for us, we engage with the repairers and help them where we can with all of the various VAT relief schemes, the bounce back loans, the business interruptions loans, and the grants, retail grants that we've seen coming through. As you say, we are paid. We pay when paid. So we're the intermediary in that transaction, and we operate a cash neutrality position. So we don't use our own cash to settle the repairs. We have improved the speed of the turnaround and the proportion of electronic payments, which doesn't require then any sort of physical banking of that during the lockdown period. And yes, we've facilitated discussions with pretty much all of our MGAs and insurer clients where we're responsible for authorising the repair, and therefore any ancillary items which have been incurred as a consequence of the lockdown, particularly sanitising the vehicles, and they are authorised by our engineers. Where we're not the authorising party, we are in discussions with those insurance companies, which ultimately it'll be their decision. But I think there's a line to toe there in terms of a precedent which has been set. I think the insurance companies, are not unreasonable. I think with everything else I've just said around the exposures which they see potentially as a consequence of this crisis, are coupled with the fact that I think AD spend and scrutiny has been under such scrutiny over the last few years with the compound inflation that we've seen as well. But it's in their gift to add those costs on or not as a new sort of standard precedent. Where you get resistance, and I agree with this, is not subsidising an economic downturn for an industry, but I think most of them were happy to pay for a reasonably incurred charge at this time.
Yeah, no, I do agree with that, and I don't think it's their responsibility to subsidise the supply chain at all during a period like this. And we've said all along that common sense is what we need to see prevail, and we've had a lot of feedback from our members, both positive and negative, where we've seen sensible decisions being made at an engineering or intermediary level around costs that have had to be absorbed by repairers. But equally, we've seen some absolute madness as well. And, I think our message is that just give make sure the engineering teams have got the latitude to make sensible decisions. We know that, and we're always happy to talk about the positive things. And, we did see that LV had stepped forward to start paying for estimating costs or pay for the charge for repairers. And I thought that was a tremendous step forward. I definitely think that, the repairers shouldn't be paying for estimating because it's a direct cost of the repair. But I thought that was an amazing step forward by LV. And I also heard this week that Gallagher Bassett for their network have introduced £150 COVID charge per job to absorb all the things that they've been having to pick up. So, there are some brilliant instances out there, but I understand that all you can try and do, Mark, is push back, isn't it? And make sure that sensible decisions are being made.
Yeah, absolutely. And today, I think that's what we've seen.
There's obviously a million and one things that kind of Mark and Trevor, you've both said that you're kind of keeping eyes on at the moment. What have been, I suppose, the most significant learnings, and this comes to you as well, Chris, in terms of whether that be from a body shop's perspective, from an intermediary or from an insurer? What are we learning about ourselves, the industry right now, that's that we can take forward? Payment terms are changing. We've changed rapidly. All of a sudden, we've moved very, very quickly. An industry which isn't typically renowned for its quick movements. But what are we learning? So that comes to you first, Trevor.
Okay, I guess a few things. The first is that our operation moved to home just prior to lockdown and fully on the cusp of lockdown. And in reality, we've had to trust our staff and our colleagues, and that's worked really well. But alongside that, we've needed the controls and verification and a significant amount of communication. So daily, intraday communication with our colleagues that is taking place. But we've also then extended that into our supply chain. So we're having daily conversations and weekly conversations with our supply chain where we're looking to empower them to make the right decisions to run their businesses without stepping in and running their businesses and making them or forcing decisions on them. And at the same time, making sure that the controls are balanced around what they're doing. I think information sharing has definitely been a benefit from this point in time. So the discussion that we're having with individual suppliers in terms of sharing information is a lot more granular than it would ordinarily be in a sort of a business as usual environment. And I think the other thing that we've had our eye on is our regulator, and the fact that once we're through this process, we do expect the regulator to be asking how we've dealt with it and what our controls were during that period of time. So we've sort of very much gone along the path of thinking, actually, what is it we're going to need to be able to demonstrate that we have done after the event?
Yeah. Okay, so same question to you, Mark. I mean, what are your key learnings from where you're sat, really?
For me, I think the first sort of sentiment I put out there was the resilience of the network that we have in place currently, and for those that stayed open during the lockdown, some of the sort of exemplary behaviour that we saw. Be remiss of me not to acknowledge that on this platform. So first of all, the performance of the supply chain that we had in place in the industry as a whole, as it reacted, I think, was more than up to standard. Our internal infrastructure and technology is really important. It worked really well with our work from home solution. We were propelled into a work from home solution very early on because of local events at one of our offices. We have Ipswich, Cheadle and Glasgow. And that really sort of underpinned and underlined some of the enhancements that were underway to our system, which are now completed, which will help us in the, I think, medium term regarding any other subsequent fallout of the lockdown period and the crisis.
Great stuff. Now, Chris, we kind of, everyone thinks they know the industry inside out, but from a MBRA or from a body shop specific perspective, what have we learned about body shops? Is it, dare I say it, is it more fragile industry than we originally thought? Is it actually, really switched on and we can manage with this kind of, should this ever arise again?
I mean, to use Mark's word, I think resilient is really apt at the moment. The body shop industry is fragile. We know it's a high volume, low margin business. And it doesn't operate very well in situations such as this, where we drop down to 20% of the normal volumes. Were it not for the Chancellor's, job retention scheme, we as an industry would be absolutely decimated. But then so would so many others. With the exception of the likes of Apple, that are very cash rich, and companies like that, not many can trade through a set of circumstances like this, keeping all their costs in place. So the repairers have been extremely resilient. They've worked together very well. There's been a hell of a lot of camaraderie out there and a lot of support from each other. It's been absolutely a privilege to work with them throughout this period. They've been absolutely fantastic. But one thing that does sort of come through for me, and it's a problem we had before this, is about our inability really to come together as an industry where there's a common threat to us, and to be able to collaborate and agree things in a really formal way and process. So, Trevor is a member of our MBRA Insurer Advisory Board, and an excellent member of it as well, and speaks a hell of a lot of sense. We are in a competitive environment. Everybody is. The insurers are, the repairers are. And to try and get agreement on subject where there's such diverse models out there is very, very difficult, even in the best of times. But I do think we need to find a way. We'd be mad if we went through this and we didn't find a way to be able to work together and agree common things together where there's a common issue or a common threat that affects the whole market. So that's a learning for me. We need to try harder at that and find a way to break through. Things like the COVID charges. I see Mike Monaghan has put a message out there. We should have been able to agree it as an industry all the way across. Boom, 80 quid. Everybody pays it. It's not exactly price fixing. It's not anti-competitive. It's a cost that having to be absorbed. But, repairers are getting it in some cases and not in others, or they're getting a tenner. Simple things like that in the future, we ought to be able to nail down quickly. So that's a big learning point for me.
Okay, great stuff. Now, in terms of that, and again, as we move on, I suppose, Chris has already said the COVID charge, that's almost, well, it's still here, obviously, but it's kind of, maybe that timeline has gone when that could have been agreed. But where are we, what challenges do we now face as an industry that, potentially there is room for some sort of collaboration on, or thought processes? We've talked about human resource management, getting people back off furlough, coming back to work. Have you got your sights set on things, that areas that we could, work on together in terms of, what's to come, really? And I'll bring that one to you, Chris, I suppose, in the first instance. Yeah,
I mean, this does hark back to the MBRA insurer or work provider advisory board meetings that we had. As leading an association for repairers, I've got a wish list as long as we're on, right, of things that I would like to change for repairers, and I'd like to improve for them. But realistically, a lot of it is super, super difficult to get agreed at a macro level, because Direct Line have got a different model to this, to Admiral, to some are broker. It's really, really difficult. But the one thing that we do all agree on is there is still a lot of friction in the process that hurts underwriters, intermediaries, and repairers. Technologically, we've not exactly smashed it yet. We've got a lot of body shop management systems in there. We've got various things. CAPS is a great example of, the opportunity there is enormous. Okay, so we've kind of got a lot of it in there already. A lot of it is at our fingertips, and yet still we're duplicating effort enormously. We can have all the technology you like, but a body shop is still going to have a bank of about five people there picking up the phone to answer questions that have already been put into the system. And and I get it, repairers aren't always the best at updating systems electronically. But, there is still huge scope there to change things, as long as we can share the benefit. It doesn't just go into the ether. So I think that's a huge one. There's still a lot around mobility that needs sorting out. It drives me mad that body shops are still providing or paying for courtesy cars or leasing cars for fault mobility. That drives me absolutely mad. We should all get rid of that as an industry. I've got a few little soapbox issues to cover off.
What have I started?
But we're in an opportunity. We've never come together more as an industry than we have throughout this period. And I think the ARC360s have been a huge part of it. It's brought us all together, and we've got some momentum. We've started talking. I just urge the whole industry really to change their mindset and let's start working together better to really start to improve a few big things out there.
Fair enough. Trevor, thoughts on obviously some of what Chris has just said, but at the same time, are there kind of milestones that you're looking at as, society starts to reopen, that you think, right, that is a critical timeline for either us as a business, our network, claims volumes, conversations, whatever it might be? They're real critical timelines that you're looking at right now.
Yeah, so I guess we're keeping very much an eye on terms of how claim volumes are developing. And if we look at the latest Apple data, that would suggest that we're at 80% now of pre-lockdown numbers. We've got to reflect that in terms of the way that our new business sales have been impaired over the last sort of going through COVID, when people just weren't changing insurance products. So to work that through. For us on an operational basis, it's really how efficient can we be at home versus the office, and how do we need to get people back? And then working very much, particularly with innovation in terms of how we manage that return to full service as volumes come back. And I think, and this is a point really I'd sort of echo what Chris is saying. I think part of that is how we think about SLAs. I think we've got to be absolutely realistic about SLAs. And actually, during this period of time, we're not seeing customers. They understand what's going on. And that's because we're giving them choice. We're giving them better education about the process. And I think a lot of the SLAs that have been applied to our body shops and our networks actually aren't meaningful. So I think that's a big area that I would sort of add to Chris's list of things that we should be looking to change, as well as embracing the technology that becomes available to us. What else in terms of our key milestones? I think it is very much going to be driven by the volumes as they change, and how we ensure that, particularly for body shops that aren't online at the moment, that they only come back online when they're ready for that. What would be the worst thing is for body shops to come back and there's insufficient work around. So I think we need to make sure that there's good dialogue taking place with the work providers.
Great stuff. Thank you very much. And Mark, I'll come to you. We've obviously, Chris has touched on a few kind of points. Trevor's mentioned SLAs in there. We've talked, again, milestones in terms of where we're looking. Same really for yourself. Give us a little insight into what areas potentially could we improve? Are we looking at what milestones? Volumes is obviously critical amongst all of this, but are there other key areas where you think actually, in hindsight, or we've had chance to look at that now, and it maybe is time for change?
Yeah, so in terms of milestones, I think it's prudent, and as a team, we're turning a bigger proportion of our attention to the medium-term impact of this throughout 2020 and into 2021, and really, as a team, making sure we've got the right balance of our obligations to all our constituent members, be that our customers, our suppliers, our staff, our clients, and our owners and investors. The planning around, really, I think it's prudent to look at some potential impacts going forward as well in that medium term. So we've talked about volumes, and of course severity and frequency is absolutely key in terms of our obligations and feeding that data to our customer, as Trevor has already said. But we've got to look at potential scenarios of a summer spike coming through if everybody doesn't go abroad this year and we see more miles driven on the road and people probably not likely to stay away in the UK as well, and more day tripping, then I think we potentially see a summer spike there. But the milestone really is for the end of the year, and what does the new normal look like in terms of the steady frequency? Is that going to be 80% of pre-lockdown as per the Deloitte report? I think it's going to be somewhere between 80 and 90 by the end of December, so that once there's stability really, and everybody can sort of refocus, and the forces of supply and demand will push us into the right equilibrium of repairers, terms, work providers, and any other movements which happen as a consequence. It's prudent to prepare as well, really, and model other scenarios which may come. We've had that sort of hammer blow of the initial impact of lockdown on the industry and everybody else's industry, but we've got to look at potential scenarios of potential OE part shortage. I know that inventory in the UK was up in preparation for Brexit, but potentially manufacturers in Asia, where factories have been shut, could impact us a little bit further down the line. So tactically looking at other parts supply solutions is a good thing to look at right now before it does hit. We might see potential regional lockdowns. We might see symptom-related closures of either our offices, our suppliers' offices, our repairers' offices. God forbid, there could be a second wave as well in the winter. So it's prudent at this point, where the new norm is really to manage the day-to-day numbers and capacity within repairers, to actually model those scenarios and have a plan ready to execute should any of those events happen.
Fantastic. That's great insight once again. And Chris, I come to you. We've spoken about milestones over the period of a few weeks, really. Furloughs, obviously, I think since we last spoke, has been extended, but yet there's still obviously a time when companies are going to have to start making contributions to those furlough payments, and things change slightly. Is there again a different timeline now for body shops that they should be looking at or are looking at?
So we're doing our best to advise repairers that ask for advice around how far to come back and how quickly. But we're all looking at the same data, and we're all making, the same calculations almost on a daily basis. So as the claims start to come back in regional areas, people are making decisions around it, having to look hard at their finances and their cash position, and considering, as you say, that more and more as we go forward, employers are going to have to pay a greater proportion of the furlough and the national insurance pieces, even though we've got sort of some more flexibility. But I do think still going to have a difficult time for repairers as they're coming back, and they've managed to avoid quite a lot of their costs. They've still had some invoices coming in for work that they did prior to lockdown, but now they're having to reinvest again in parts, equipment for new jobs, and their suppliers are coming at them very quickly, some of them reasonably aggressively as well, in order to settle up their terms. Body shops weren't in a brilliant cash position, prior to this. They're certainly not in a great one now. So, I think we've got some really testing times for repairers going forwards, in terms of having the financial ability to keep trading on, even though they've got work coming at them. It's a bit like an expanding business that sort of runs out of cash. So that's a challenge, and it's something that we're constantly looking at ways to help our members with. But whilst we're on that subject, I think quite a few of our members have got fairly deep concerns, maybe completely unjustifiably, about intermediaries and credit hire companies, etc. I was on a call with the CHO last week that had a lot of credit hire companies on it. They all will have been through a difficult situation here as well, like any other intermediaries. And the concern for repairers is, they may have a lot of debt sitting with an intermediary. And, as we've had in the past, sometimes they go bang, sometimes they go pop. If a repairer goes pop, the world shrugs its shoulders and goes, oh, there you go, there's another one. When a big accident management company goes pop, repairers don't get paid, and they lose a lot of money. And they're difficult to come back from in the best of times. At the moment where there's no cash, it would be pretty tough indeed. So that's a real worry for our members, and it's something that needs to sort of come up the agenda for us as an association, is to try and find a way to give our members more protection around things like that. Whether, Mark, I don't know whether, there's consideration given to that kind of challenge within your organisation, about the ability to put money into escrow, for example, and stuff like that. But it is a real concern at the moment, and it's something that we need to push up the agenda before something happens.
Okay, fair enough. Now, Mark, have you got any comments that you want to make on that?
I think that obviously would come with the credit risk itself for either WNS or for an insurance company. Whilst we're going to do everything we can, I've already complimented the network that we've currently got in place. We don't want to lose any of those members that have been with us for so long and helped us through this period, and support us in our key insurer and MGA relationships. So, whilst we fight fiercely with our competitors out there in the marketplace, there is a common fundamental principle, fundamental infrastructure upon which we all rely. Only as strong as its weakest point. So we're always happy to entertain better ways of funding that and maintaining that. But at the end of the day, it's not really our money to be able to do that with. We'd need to be able to do that with our customers. And as part of our role, we can always have those conversations.
Okay. Great stuff. Now, I think the conversation we've found a lot of positives to stem from this. Over the weeks, that's kind of becoming apparent. And one of the key things that we've spoken about is communication, and the fact that, everyone seems in more, greater contact with each other, better understanding of each other's businesses, potentially more than ever before, which is great. But, and again, the question is, do we think the industry will ever be the same again? And I'll come to you with that one, Trevor.
I suspect it will look different, but not a million miles away from where it is today. I think insurance has its cycle, and people very quickly forget about the areas of the past and sort of return. So we always see this sort of soft and hard cycle within an insurance pricing environment. I'd like to think that some of the improvements in communication will lead to better innovation and pick up some of those points that Chris has made. And that actually that dialogue between the work providers and the body shops will lead to innovation and improvement. I think my concern is, though, is this is such a competitive market, and repair cost inflation is the biggest in the last 2-3 years, has had the biggest focus that it's had in my entire career in the insurance industry.
Yeah.
So there are going to be challenges around insurers maintaining cost control, which doesn't mean that we're going to be able necessarily just to support everything that we would, or that Chris and his members would want us to be able to do. However, we're engaging like we've never engaged before, and therefore that dialogue should continue to see what innovations can come from it. And certainly in our discussions with Innovation Group, we have got a number of ideas in terms of things that we've already done and enhancements that we can make to the network that supports us.
Okay, great stuff, Mark. How critical is time and decision making right now in the industry? Are we blessed with kind of just seeing this out, or is it truly time to take some potentially radical action?
I think the action that's already kind of forced its way into place is Trevor's already mentioned it, the improved collaboration and, if you like, candor between the work provider and the repairer, because at times of crisis we need to cut straight to the chase, straight to the truth of the matter. We don't want to be overloading repairers that can't take the volume. We don't want to be taking work away from repairers that have opened as for one of the purposes being for WNS's provision of work, which they get allocated to them. And I do think, and I hope as well, that the many initiatives can be born out of that new level of candor and collaboration between work providers and repairers. And also there's an opportunity there as well, if you like, a silver lining, which I think work providers like ourselves, where we're already sort of at a mature stage with it, but others as well that aren't necessarily, will look at their digital estate and their levels of automation that they have in engaging customers and repairers and that entire customer journey, and potentially accelerate that, which will be a benefit for the industry as a whole.
Great stuff. I'll come back to you in a second, Chris. Trevor, questions come through. Neil Atherton, you were talking about bringing people back to the office. That potentially is reduced significantly because of efficiency gains that could be made by people letting people work from home. What's your thoughts on that?
I think our thought is that we've worked efficiently and effectively from home. However, part of the DNA of our particular business is that we're a very close-knit community, and we just don't get that in the current working scenario. And particularly for our trainees, and individuals' development is quite a challenge. There's a lot of activity in our business, again, between our pricing and our claims and our actuarial teams. And we can do Zoom calls all day long, but it's not the same. We're not having those water fountain conversations which actually inspire and progress the business. We've never been a business that's been huge in terms of big formal meetings. So I think for us, I would say that we are missing that office environment, and we would like to return to it.
Okay, fair enough. Chris, just giving you, very conscious of time, priorities for you and your members over the sort of coming week or weeks?
Yeah, well, very much our priorities, supporting our members through the sort of, come back to work. As I said, we're going to be in touch with all of our members to really understand the challenges that are in front of them right now. We're ready to adapt and to change our products and services in order to give them what they need in the moment. So yeah, that's probably their sort of key priority for the moment. But yeah, going back to sort of what you said earlier, you know, it has been an epoch event, I suppose is the right word, and it needs to be a catalyst for change in the industry. You know, repairers have slimmed down, cut costs out, and everything else. I think a lot of them coming back to work are surprised at what they're able to achieve with less of their staff there, and you know, with sort of streamlined, more efficient processes that they've been forced to put together. So it's been a big learning curve for repairers and us as an association. But as I said earlier, you know, the real benefit to all of us as an industry will be around real collaboration, you know, really putting together some operating principles that cut all the way across the market and guidelines that everyone can work to that just make sense. You know, things that are not around the competitive elements of stuff, just common sense stuff that we should all be doing. And that needs to be, you know, a key priority for us to keep pushing forward with.
Fabulous, wonderful stuff. Now, just before we wrap up, repairers, there is a new trend tracker, ARC360 MBRA survey out at the moment. So if you can complete that, we'll be giving you the full update next week on the webinar in terms of the results from there. Again, it's a continuation of the previous two that we've run. So hopefully we'll gain, again, a continued insight into the activity of the industry at large. Been another great webinar. Thank you very much indeed to yourself, Trevor, Mark, and Chris. Once again, thanks very much for your time and all your input. Again, just to raise awareness around our corporate partners and the Motor Claims Festival, which takes place at the end of the month. Contact the ILC team for more. Lots of activity throughout the entire week, sessions and various social events taking place. So, and hopefully at some stage soon, we'll be back to some form of physical events. But in the meantime, take care, everybody. Thank you very much for tuning in once again, and we will see you all again next week. Take care, all. Thank you.
Yeah,
Bye-bye.